Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. If I look like I'm in a different location today, it's because I am. Typically, you see me in my home office, but today I'm back in our working office in the amazing and busy downtown Toronto core. It's always good to check in with everybody. I can't say that I'm delighted to be back in daily harness in Toronto after a wonderful week away, and we had amazing weather during the whole time, by the way. And if truth be told, I was always tuning in daily, at least briefly anyway, to see what was going on in the market. And today is a special day, because I'm going to show you something that is usually only reserved for our clients. Today, we will look at what's been going on in the NASDAQ 100 index itself, because we have reached a very intriguing point in the market. Before I show you our SVA index chart of the NASDAQ, I must point out very clearly that the indices, that is to say the NASDAQ, the Standard & Poor's 500, and the SP/TSX indices all trade like single stocks. By that, I mean that they observe the same SVA rules as individual stocks, and that is extremely useful for doing some market timing. These indices were powerful resistance and support indicators during the 2022 bear market. And even before and after that period. Note that they are dynamic, which means that as soon as I show you the chart, it's old news, particularly during earnings season, which is coming up right now, when balance sheet changes can be significant. If you want access to the live updated chart, as our clients get, do not hesitate to reach out to us at info@strategicanalysis.ca, and we'll get the ball rolling. Second, if you missed my appearance on BNN Bloomberg last Tuesday at noon, I've included a link to that market call episode, which you can watch at your leisure. Last year, our stock selections had a dynamite year, returning on average over 42%. Beating the TSX, the Standard & Poor's 500, and even the growth index, the NASDAQ 100. Not bad for a value investor. I have a suspicion that this coming year could be pretty darn good as well. I also plan to be on BNN Market Call again shortly, but if you want to see me on again soon, you can always email BNN asking for Ross Healy to be on again with a question about your favorite stock. They'll know what to do. Anyway, right now, let's take a close look at the NASDAQ 100 and the FANGs. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Well, let's start with the NASDAQ 100. And here is the NASDAQ 100 going back to 2019. Starting way back at the first bottom there, that was the COVID low, remember that? It came right down to its low super growth price, the LSG price at 4.5 times book value. Now, this wasn't the most significant bottom. It actually was the Standard & Poor's 500, which bottomed perfectly at its growth price. Anyway, the NASDAQ bottomed and roared up to its bubble price. That's this dark purple line here. Broke out, pulled back, just like a normal stock and a normal index should do, and then happily moved on to its HB1, its high bubble 1 price, which is 9.5 times book value. Now that was a very, very, very long-term high. You'll note that it took quite a while, actually, as the index sort of took its time trying to decide, am I going higher? Am I not going higher? And it just sort of marked time here before setting back. And look at how beautifully it came down, right down to the bubble price, rallied, okay, broke down, rallied back to the breakdown point, and then bottomed finally at its mid-super growth price before finding its footing. Since that time, of course, it's come back up to the bubble price, broken out, pulled back, as they say, the way a good stock should. And as of a couple of days ago, the NASDAQ 100 was right back up to its HB1 price. And now we wait and see. Of course, the first move that happened when it got here was that sharp setback yesterday. It's struggled to try to kind of get back on side, but this late in the day, we see it kind of oozing down once again. Now, let's see what the individual stocks did during this period. Well, let's start off with Amazon, and good old Amazon. It just continued to thread the needle. Nothing particularly interesting. Nothing that would tell us very much about the potential direction of the stock. So let's carry on. Well, when we get to Alphabet, it nearly got up perfectly to its bubble price, which I know I've showed you before, has been the high in this stock for a very, very long time. And it had that nasty little setback yesterday. Same thing with Microsoft, got right up to its HB2. That's 12 times its adjusted book value, and has set back. Netflix got up to its HB2 price, and it has set back. In fact, it had quite a setback, didn't it? Meta has broken out, and actually it pulled back sharply. Didn't break the bubble price, however, so it remains onside. So both Meta and Amazon, I think, look safe for the time being. However, when we take a look at Apple, it's got up to its HB6, which is 33 times its book value. Now, it's been holding in fairly well. Had a little setback yesterday, but it's been holding in there okay. When we turn to Tesla, well, I will have to say Tesla, rather unexpectedly to me, because I had to sell on the stock, as you will recall, blew out over its HB1 price and roared right up to its HB2. So again, 12 times book, but had a really nasty setback yesterday, and doesn't look all that robust today either. And then finally, of course, NVIDIA. And look at NVIDIA, a nice sharp setback yesterday. Bit of a rally today, but it's broken below its HB8, which is 51.52 times its book value. And, well, you know my feelings on the stock, as I have an outright sell on this company. And that very much holds. Now, to briefly recap, well, this may be the first time of asking. What do I mean by that? Well, as you saw, the NASDAQ 100 has now reached back up to dead on its HB1 price, or 9.5 times book value. And yesterday, it set back abruptly. Now, the last time that the NASDAQ attained this exalted valuation was at the peak of the market in late 2021. It struggled there for roughly 3 months before heading down to its lows in late 2022. To To say that we are agog at the possibility that the NASDAQ will do this again is an understatement. And if it does, we will all need to exercise caution towards the overall market, as the setback, notably among the FANGs, could be worse than interesting. Speaking of interesting, NVIDIA, Alphabet, Microsoft, Netflix, Apple, and Tesla, that is to say 6 of the 8 FANG stocks, or would you prefer their new moniker, the Magnificent Seven, all traded right up to key break points, and all had a bit of a nasty day yesterday before the relief rally of today, which looks as if it may be fading. In other words, 6 of the 8 FANGs essentially corroborated what the market, as exemplified by the NASDAQ 100, is doing. Now the question is this a warning of things to come, as occurred the last time the NASDAQ was this high? Or is it just a stumble on the way to heavens knows what? Well, tune in, FANG Friday viewers. We have yet to find out. Of course, it's not only the NASDAQ that we need to follow, but the S&P and TSX as well. And we go over all the markets during our regular weekly client webinars. Again, if you're not a client but want to join our investing family, go to www.strategicanalysis.ca/pricing to join today. Of all the times that you may benefit from taking the SVA service, this may be the most important of all. Anyway, that's all I would like to say this week. And so for now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. And today, I have now shown you an additional and very powerful tool indeed. I'll see you next week.